In this video, we are going to talk about a detailed comparison of gold and Bitcoin as investment options for hedging against inflation. It examines the historical performance, security, volatility, and potential gains of each asset to help investors make informed decisions about which might offer better protection and returns in an inflationary environment. Inflation erodes the purchasing power of money, prompting investors to seek assets that can preserve and increase value over time. Traditionally, gold has been the go-to hedge against inflation, but in recent years, Bitcoin has emerged as a potential alternative. This article explores the strengths and weaknesses of both assets to determine which might be the better hedge against inflation. Gold, the traditional safe haven. Gold has been used as a store of value for thousands of years. Its tangible nature, limited supply, and historical track record make it a reliable asset in times of economic uncertainty and inflation. Historical performance. Gold has consistently maintained its value over long periods, particularly during inflationary times. During the 1970s, for example, gold prices surged as inflation rates soared. Security. As a physical asset, gold is not subject to cyber risks and offers a level of security that digital assets cannot. However, it does require secure storage, which can add to costs. Volatility. Gold is less volatile compared to Bitcoin. While it can experience significant price swings, its market behavior is relatively predictable. Bitcoin, the digital contender. Bitcoin, created in 2009, is often referred to as digital gold due to its limited supply and decentralized nature. It offers a new age alternative for investors looking to hedge against inflation. Potential for high returns. Bitcoin has shown remarkable growth since its inception, with substantial gains in its short history. Early adopters have seen significant returns, but the asset's future remains highly speculative. Security and accessibility. Bitcoin offers advantages in terms of liquidity and ease of transfer. However, it is susceptible to cyber attacks and requires secure digital storage methods to prevent theft. Volatility. Bitcoin is highly volatile, with frequent and dramatic price fluctuations. This volatility can result in high returns but also poses significant risks. Comparison of gold and Bitcoin. In the realm of investment, both gold and Bitcoin are often discussed as hedges against inflation and as stores of value. While they share some similarities, such as limited supply and the ability to hedge against economic instability, they also have significant differences that cater to different types of investors. Below, we expand on various aspects of gold and Bitcoin to provide a comprehensive comparison. Supply and scarcity. Gold, natural resource. Gold is a finite natural resource extracted through mining. The annual supply of gold increases slowly, primarily through new mining activities, which are costly and environmentally impactful. Historical accumulation. The total amount of gold ever mined is estimated to be around 197,000 metric tons. Its scarcity is naturally ensured by its geological occurrence. Bitcoin, digital asset. Bitcoin's supply is capped at 21 million coins, a limit embedded in its code. New Bitcoins are created through a process called mining, which involves solving complex mathematical problems. Predictable supply. The rate of new Bitcoins being mined is halved approximately every 4 years in an event known as the halving, which will eventually lead to the total supply being reached around 2140. Market acceptance and use. Gold, universal acceptance. Gold has been a universally accepted store of value and medium of exchange for thousands of years. It is widely held by central banks, governments, and individual investors. Industrial and jewelry use. In addition to its investment value, gold is used in various industries, including electronics and jewelry, which adds to its intrinsic value. Bitcoin, growing acceptance. Bitcoin is increasingly accepted by a growing number of institutions, businesses, and individuals as a legitimate asset class. However, it is still in the process of achieving widespread regulatory clarity and market acceptance. Digital transactions. Bitcoin's primary use is as a digital currency and store of value. It facilitates peer-to-peer transactions without intermediaries and is popular in the digital economy. Security and storage. Gold, physical security. Gold needs to be physically stored in secure locations such as vaults or safes. This physicality provides a sense of security but also incurs storage and insurance costs. No cyber risk. Gold is not vulnerable to cyber attacks, hacking, or digital theft, which can affect digital assets. Bitcoin, digital security. Bitcoin is stored in digital wallets, which require robust cybersecurity measures to protect against hacking and theft. It can be stored in hardware wallets, offline, for increased security. Transferability. Bitcoin can be transferred quickly and securely across the globe, which offers convenience but also requires careful management of private keys and passwords. Volatility and stability. Gold, lower volatility. Gold is known for its stability and lower volatility compared to many other asset classes, including cryptocurrencies. Its price movements are relatively predictable and less extreme. Historical stability. Over centuries, gold has proven to be a stable store of value, especially during times of economic turmoil and high inflation. Bitcoin, high volatility. Bitcoin is highly volatile, with significant price fluctuations that can occur within short periods. This volatility is driven by market sentiment, regulatory news, technological developments, and macroeconomic factors. Potential for high returns. While volatile, Bitcoin has shown potential for substantial returns, attracting speculative investors and those seeking high-growth opportunities. Inflation hedge. Gold, proven hedge. Gold has a long history of serving as an effective hedge against inflation. During periods of high inflation, gold prices generally increase, preserving purchasing power. Central bank reserves. Many central banks hold gold as part of their foreign exchange reserves, further validating its role as an inflation hedge. Bitcoin, emerging hedge. Bitcoin is often described as digital gold and is seen by some as a hedge against inflation due to its limited supply and decentralized nature. However, its track record as an inflation hedge is still developing. Speculative nature. The speculative nature of Bitcoin means that while it can potentially act as an inflation hedge, its effectiveness is not yet as established as gold's. Liquidity and market dynamics. Gold, highly liquid. Gold is highly liquid, with established markets globally. It can be easily bought and sold through exchanges, brokers, and direct transactions. Market stability. The gold market is relatively stable, with a broad base of buyers and sellers, including central banks, institutional investors, and individual collectors. Bitcoin, increasing liquidity. Bitcoin's liquidity is improving as more exchanges and financial platforms offer trading and investment options. However, it can still experience periods of low liquidity and high price swings. 24/7 market. Bitcoin markets operate 24/7, unlike traditional financial markets, which provides continuous trading opportunities but also exposes investors to around-the-clock volatility. Diversification benefits. Gold, negative correlation. Gold often moves inversely to stock markets and other financial assets, providing a hedge against market downturns. Its inclusion in a portfolio can reduce overall volatility. Stable returns. Over long periods, gold can offer stable returns, making it a valuable component of a diversified investment strategy. Bitcoin, independent asset class. Bitcoin's performance is largely independent of traditional financial markets, offering a unique diversification benefit. Its inclusion can add an element of non-correlated growth potential to a portfolio. Risk-return profile. While adding Bitcoin can enhance potential returns, it also increases the risk profile due to its high volatility. Conclusion. Choosing between gold and Bitcoin as a hedge against inflation depends on the investor's risk tolerance, investment objectives, and belief in the asset's future potential. Gold is ideal for risk-averse investors seeking a stable, historically proven store of value. It offers security, lower volatility, and broad acceptance, making it a reliable hedge against inflation and economic uncertainty. Bitcoin appeals to risk-tolerant investors looking for high growth potential and who are comfortable with its volatility and speculative nature. It offers modern advantages in digital transactions, liquidity, and the potential for significant returns. For many investors, a diversified approach that includes both gold and Bitcoin might be the most prudent strategy, balancing the traditional stability of gold with the innovative growth potential of Bitcoin. This combination can provide a robust hedge against inflation and enhance overall portfolio resilience. Which is the better hedge? The choice between gold and Bitcoin as a hedge against inflation depends on the investor's risk tolerance, investment horizon, and belief in the asset's future potential. For risk-averse investors, gold remains a safer, more predictable choice with a proven track record. It provides stability and security, especially for those who prefer physical assets. For risk-tolerant investors, Bitcoin offers the possibility of higher returns but comes with greater risk. Investors who believe in the long-term adoption and value of cryptocurrencies might consider Bitcoin a viable hedge. Conclusion: both gold and Bitcoin have their merits as hedges against inflation. Gold provides a time-tested, stable option, while Bitcoin offers potential for high growth despite its volatility. Investors should consider their individual risk profiles and investment goals when choosing between these two assets. Diversifying by including both in a portfolio might also be a prudent strategy to balance potential gains with security. We need your support to help our channel grow and reach more people with our engaging content. By subscribing to our channel, you'll stay updated on all our latest videos and help us reach new audiences. So, if you enjoy our content and want to be part of our community, hit that subscribe button and the bell to join us on our journey. Thank you for your support. Together, we can make our channel thrive and create even more amazing content for you to enjoy.